Okay, so welcome everyone to our Options Alert Service update video. Today's January 31st, 2020, and I wanted to give everyone an update on what is happening with our options trades. And so let's start with where we were since the last move on the two trades that we have. And before we do so, I wanted to quickly point out that SMB Training is not a broker-dealer. We're doing this webinar for educational purposes only. Today's position and all positions on these alert service videos are hypothetical. We enter them into software that gives you mid prices in the market and therefore are not subject to the market factors of liquidity, slippage, and commissions. I also wanted to point out that SMB Training wants you to know that options trading is risky and you should not expose any of your capital to options trading until you have gotten a good solid education. And then when you do so, please trade on a minimal level relative to your net worth and net income until you have much more experience with options trading, have traded through lots of different markets, and understand how options respond to varying market conditions. Okay, with that, we want to go over where we were on our February Rhino trade, and this is the position that we were in as of our last meeting, or last update, I should say. And you can see that we were in the fully scaled Rhino put broken wing butterfly structure down here, and we had on a 2-lot broken wing call butterfly centered at 1710. And so that is, if you want to sort of a graphic image of what this trade looked like, this is where we were. So at that time, we were up $785 on the trade, which is roughly a return of about 3% at that time. Okay, so this day, the market was rallying and triggered an adjustment. And in order to do so, we cut our upside deltas, which are the way that options positions respond to price movement, by adding a second call broken wing butterfly up here at 1670, 1710, and 1740. And I apologize, I meant to say earlier that the original position was centered at 1700. So we added a single broken wing butterfly here at 1710, and so we just cut deltas a bit to get back within our delta standards for the trade. And there you can see a pictorial version of the trade through the analyzed graph on option view. All right, so that's what happened that day. Then the next day, this is where we were again. We had not yet made our adjustment, but the next day, and we're waiting for option view to update here. The next day, the market rallied quite a bit more, and so we needed to do something a little more drastic. And so what we did was we actually closed these two broken wing butterflies, the 1730, 1700, 1650, and we rolled those up. We just rolled one up, actually. We didn't roll two, we rolled one up to the 1730 level. So you'll see in a minute, we actually, and let me, I've got to correct something here, which is I've got to only show the February trade. So you'll see that the position at that point was down to actually two butterflies again, but the second one was up so much higher than the first. This one's up at 1730 that it had the delta effect that we were looking for. So we closed the two of the 1700s. We closed both of those actually, and we rolled only one of those two up to 1730, and that had the effect of, again, cutting our deltas further. So you can see now we are way above this put broken wing butterfly structure that we first entered into initially on the trade, and that's where we were because the market had rallied quite a bit since we first got into the trade. So that's where we were. And then what happened was, as you like to see on these trades, the market pulled back. and it pulled back quite a bit, especially this week, and you know, as a result of the market's reaction to the Chinese coronavirus situation. And so therefore, we just completely closed the trade. It's no longer open. And as you can see from our report on OptionView, that was trade ID number 5, the February trade, and we closed that for $1,095. So that was a 4.03% gain on the February trade, and the January trade was 4.8%. And so the two trades combined had about 8.83, I guess is the exact number of returns so far in 2020 for our campaign of Rhino trades. Now, so that was the conclusion of the Rhino trade. And so that was also a successful trade. Maybe it would be helpful if I were to show you where we were on the trade before we expired, just so you kind of get a feel for what triggered my conclusion to close the trade and take our profits. And let me see, where did that occur? Just give me a moment, I'm sorry. Yeah, so here we are. And so as you can see, we were early in the morning. The market had actually rallied a little bit, but it had pulled back into this area. And so we were down to the last 2 weeks, 3 weeks and change in the trade. And you have to be a little bit careful with this trade as you pull into expiration, because you can get caught in between what we call the sea of death in options income trading, which is an area where you're up money before expiration day, but when expiration day actually comes, you could actually rapidly lose value and end up losing money. So we got a bump in valuation on this particular day, and I decided to take advantage of that and get out of the trade. And that's just the kind of thing you do as you get a little bit more experienced. You get these high value days, and what you want to do is take advantage of them. And that's what we did on that day. Now, we're going to go backwards in time so we can start to take a look at the the March trade. And the March trade, we did not enter until the 3rd. And that is because that's 77 days out from, let's see, that's 77 days out from the beginning of the 3rd Friday in March. And while we can enter anytime between days 84 and 70 with the Rhino protocol, typically we're going to enter on day 77. Now you'll see at the end of this meeting that we may not enter on day 77 for April, which happens to be today, January 31st. And that is because I have a little concern about going into a weekend in a rollover, in a market that has rolled over this strongly. Now the SPX is down 52 points today, and we're going into a weekend. I just think it's a better idea to kind of hold off. We're still within the range of when we would typically enter a Rhino, and I don't want to jump the gun and find ourselves in some kind of a funny position on Monday morning. So in any event, so this is where we were on the March position, and we entered it on January 3rd. And then we had, and this is very common for a Rhino trade, the March trade had no adjustments at all until January 14th. And on January 14th, because the market had been kind of channeling around a little bit, there was not a big move upwards, but finally we got to the point where the position was called for an additional broken wing butterfly to be added at the 1680, 1640 being the center of the broken wing butterfly, and 1590. The original put broken wing butterfly was 1570, 1620, 1650. We added to that 20 points above the prior one. That's the protocol. and that's what we did. So this is where the position looked by the end of the day. Now, at that point, then we had a little bit of a flurry of activity, and that happened on the 16th, where you'll recall the market started to really rally a bit here in the middle of January. And so we're going to move now to the 16th. And on the 16th, you'll see that we added, okay, where is this on this? I'm not at the 16th yet. My apologies. So on the 16th, you'll see that we added 3 call broken wing butterflies. The market was up at 1705. It was a big move that day. And so what we needed to do, just going to focus on the March trade here, we needed to actually add 3 to get at the point of the day where we put the trade on. We actually needed to buy 3 of these call broken wing butterflies to get our deltas where we wanted them to be. Now, as it turns out, that was somewhat of a peak point in the market, but you can't know that. Market's taken off like a rocket. You had a breakout here, so there was every reason to believe there could have been further upside movement, but what that did not come to pass, and that happens in trading. Something that is moving one way is eventually going to start moving the other way, and so we had to adjust to that. And so as a result, on the 24th, as the market began to pull back as a result of, if you'll recall, January 24th was really the day when the market started to hit the panic button about the coronavirus. And so on this day, we added a call vertical. That's not a common move in a Rhino, but it's certainly one of the tools you have. And it was the way to deal with a need to cut our deltas back. And so you see that was a decent sized sell-off on the Russell that day. That was what, like a not quite 1.5% sell-off, but it was a strong sell-off in the Russell that day. And so what we did was we were cutting our deltas just to create a situation where if we had further downside, there would not be a lot of damage to the trade. So at this point, we're down $500. And this was the beginning of volatility popping. Now, the next move was that Monday. And on that Monday, you'll recall that you got an alert from us, which told you that we were pulling out of the entire upside of the March trade. And the reason we did that was that you just get a feel for the market after a while. And there was clearly a sentiment change. And it was my judgment that we did not need a further upside protection, and we should start worrying about the downside a little bit. So I pulled out of those call broken wing butterflies and put ourselves in a very strong position so that I actually, by the way, closed that call vertical too. So that call vertical, which was a bearish call spread, we closed that for a profit. And of course, we took a loss on the call broken wing butterflies, and that's because obviously those were up, now way above the market. So this is where we were as of the January 27th, which is earlier this week. And then today, so we'll move to right now. So you're going to start seeing live data now. Today, we pulled out of the second of the 2 put broken wing butterflies, the higher of those 2, we pulled out. And as you can see, because of our aggressive campaign of adjusting to the downside, which is very much a part of the way the Rhino goes, we greatly reduced our loss. And in fact, now we're down to a loss of less than 1% on the trade, when we were up around, let's see, I guess we were up around 3.5, almost 4%. And so we're moving around a little bit. Now we're down even less than that. But the point is, we have a position where the March trade is very, very much under control. Our deltas are very, very flat, as you can see. The flatness of this line is indicating that not much, is going to happen to the value of the trade. most likely, unless there's something, really crazy happens, like some massive increase in volatility at the end of the day, which on a day like this, who knows? But in any event, we're really, really very much under control on a trade which had gotten badly whipsawed, is what happened to us here. This is one of the beauties of the Rhino. It just responds, really well to lots of different things. And we pulled out of those, when we needed to, we pulled out of our upside adjustments, took our lumps on those, and we're doing just fine on the trade. We're down a little bit of money, but in a typical whipsaw with lots of other strategies, we would have been in some kind of trouble. Right now, we're not really in trouble. At the end of today, if the market stays below 1620, we're most likely going to be rolling this down. It'll kind of depend on what happens at the end of the day, but if we're down around below 1620, right now the Russell's at 1614.53, which is its low of the day, and the SPX is down almost 55 points. S&P futures are down 62, so it's ugly out there, and we're just hanging in there on our Rhino very calmly, dealing with things as they come up, not panicking at all. And our not panicking has served us very, very well. In fact, we're up quite a bit of money since the market turned its sentiment. We're down money on the trade, but we're up quite a bit from where we were. You'll remember we were down almost 900 bucks. So we'll just keep methodically, calmly, like professional traders, handling this trade. And hopefully we can pull some money out of the market before it's all over on the March trade. Probably won't be entering the April trade, but at the end of the day, not sure yet. But probably over next week, we will enter the April trade. We'll keep you updated on that via a new alert. So I hope everybody has a great weekend and hang in there with the market. If you maintain a cool head, you typically come out very well as a trader. So take care, everybody. Have a great weekend.